Hi, this is Randy Finney with Right Side of the Chart, and this is a mid-session update for Wednesday, August 3rd, 2022. It is 11:24 a.m. Eastern Time as I'm starting the video, and we're going to go over the usual suspects that I've been covering lately: the equity markets, precious metals, energy. We'll look at natural gas, crude oil, and coal stocks. I'm going to just go through everything quick. So I've been covering these things. I'm also going to do an update on Treasury bonds, and again, I'd like to just kind of pack it all in there, and if I spend too much time on any one thing, it turns into one of those 40-plus-minute videos. So QQQ, nothing's changed there. Well, yes, it has, actually. Let me say that. We're a little bit above that 317.35 level. Fairly impulsive day, about 2% up. I would put good odds this is going to prove to be a false breakout. Again, this is resistance that I favor shorting. And I will say this, though. Price action's been strong. We consolidated. We hit that level or almost hit it on Friday. I mentioned we tagged it Monday, yesterday. And so we had a period of consolidation which we've broken above. Now, you can call that a bull flag if you want. And yeah, it certainly takes the form a little bit. And that would certainly, if it plays out that way, there's a flagpole, there's a bull flag, that would project up to that target. But again, it's about risk reward. That's that downtrend line, major resistance. A lot of eyes are going to be on that if when we get there, and it's only 3% above where we're at right now. So, and based on what I'm seeing on the shorter term charts, like I said last night, it's, this is, my convictions aren't super high, but I do think the risk reward is unfavorable for that 3%. I'm going to guess this breakout's going to fail, is what it looks like to me, and prove to be a false breakout above that. Again, two things. Some eyes see the potential bull flag. Some eyes see a lot of eyes should see that 317-ish resistance level. But let me show you a few other things that we're looking at here. Let's jump down to a 60-minute chart. And divergence is still there, and we're starting to steepen off a little bit here. Just take this line, still very much divergent high that's just built a little more. And if this does prove to be a false breakout, it's going to be pretty powerful, because that's probably trapped quite a few latecomer longs that didn't want to buy here, but want to buy now, after the NASDAQ 100 has gone up in just a matter of a couple months, gone up almost 20%. And so that would send us back down to any of those potential targets I've given you, and maybe as much as that, quite likely now, more so if we fail to break out and move back down below that 312, 313 level, that would be a pretty powerful bear trap, bull trap, I'm sorry, and could send us down there. So, maybe we run up. Look, the trend line's not too far above, like I said, and price resistance as well. Right there about 330, you have the trend line and the price resistance coming in. So, again, if you want to stay long, raise stops, try to shoot for that, great. But the odds, however good they are for a reaction here or a reversal, are going to be a whole lot better when we get there, because we'll be quite overbought. We're, of course, overbought. This gets fairly common on the 60-minute chart. Let me just show you. This is the RSI here. You can see we're overbought there, and you usually get these pullbacks off overbought readings, and overbought there, overbought there. And you can see what happens when you get overbought. So overbought, the one thing about it, it can stay overbought or become more overbought or stay there for an extended period of time. But ultimately, that's where you get these pullbacks. So personally, I'm staying short. In fact, I told you I wasn't going too crazy with it, as far as positioning, but I added today. I'm just going to layer in here and keep layering in up until that level there. And we'll tell you what I'll do when we get there. I may or may not give it a little room above that level there at the time. We'll see how things look. So that's it. Let me just give you NQ and then the other ones. This is a 10-minute chart. My active they're all active trading time frames. Intraday time frames are 60-minute charts, 5 minutes, 10 minute, 1 minute. I'll trade sometimes. But here's what we've got. I'm just going to draw out the lines here. The divergence, we had a divergent high there. Actually, we had our first one there, and we got a correction, right? And there was divergent high 1. And this is not not separate divergences. They are, if you will, consecutive divergences, but all in the same divergence, because that was the high peak in the PPO right there in the RSI, and so we made roughly equal, slightly lower high there. Had a nice tradable pullback. Went on to make the next or extend the divergence there. Had a little bit bigger pullback, right? Bigger divergence, typically bigger pullback, and now we take the line like this. We're still making equal to lower highs on the RSI and PPO, and so it's even bigger divergence, which by that logic would tell us an even bigger drop. And there's your number right there if you're an NQ trader. Big level here. I'm just going to color up these levels for you. Let's make that yellow to show you that's an important support level. If you're an active trader looking for just a shallow pullback, you could target that level. That's 12,882, right? Okay, give or take 12,882. And so the way I see this going is like this. Come down there, give me my arrow tool, hit that. There'll be undoubtedly some reaction there, and then come on down to that next level there. I'm going to color it up for you, 12,695. So just, oh, I didn't mean to do that. Let me put it back, and I was trying to color it up right there. Change it a little bit, but I'm going to use that level there. And I'm going to make that yellow for you. And again, this is a 10-minute chart. 12,690, call it 12,700. And then to look at the 60-minute chart right there. There you go. Key features here are this divergence has been building, building, building. You had a little breakdown there, that wedge, a little snapback. Sometimes you never look back, and sometimes you go into either back test a wedge or push on to make a marginal new high. So you can see here, and then so you've had the divergence building here on the RSI, but you made another higher high, slightly higher high. So this is where the divergence is now in the PPO right there, and you can see from here. 12,517 is the likely, but there's that level I just gave you right there. So that's a near-term pullback target, 12,693. Again, I called it 12,700 on that 10-minute chart. From where we're at right now, we haven't reversed yet. We're still going up, but that's about a 4.5% drop to kind of give you an idea. And then that would, let me just call that my minimum pullback target right now. So again, this so far, got to give the bulls credit. This is where you usually get a pretty quick reversal. And what happened is we had a reaction, but it was more so in consolidation. But again, just telling you from gut feel, instinct, reading that just because they haven't taken it down yet, I don't. I still think they are going to take it down, and I think it's just sucking in some last-minute late-coming bulls to the party before they shake out this next wave, get a wave down. My max target remains and has not, again, max target just means I'll read the charts, trade it as it comes and goes. But I would love to see a pullback to this trend line, because if we get that, all these JCL longs, Johnny come lately that got, bullish late to the party wanted to buy, they'll be shaken out in their weak hands, and then you come back down here, step in at that trend line, and you'll have a more stronger core holding, and finally get that next thrust up to my final swing targets. And again, if that happens, great. I know that's quite the detailed plan, and has been from back here, that we would do this, go up here, come down, and then go up and hit that level. So if it doesn't play out that way, I'll adjust accordingly. But right now, like I said, we're only a hair above those previous highs right there, and just by a slight incremental margin, so it's not too much of a concern right now. Other things I wanted to show you, I did get a trade idea out to you today on the small caps, untriggered still, but right, but this is a bearish rising wedge, a beautiful one too. Look at that. You have, why is it beautiful? Well, multiple reactions, 1, 2, 3, 4 reactions, 5, 6, and like any wedge, price is compressing. It means the momentum is waning. These impulsive thrusts in the beginning are strong. You got a lot of buyers coming off there, and you get fewer and fewer, so the momentum is waning. And that's what these things are down here, guys, that I'm always looking at, these indicators. They're called momentum indicators, PPO, RSI, MACD, and they're just showing you when your prices are going higher and the indicators are going lower. It shows you this trend is losing momentum, just like this trend was, just like we had a bearish rising wedge there, just like we had a bullish falling wedge right here. Shows you the momentum to the downside was waning, and that's where you went long. And then you had a bearish rising wedge. You had your sell signal came on the breakdown. And if you waited too long, you missed it. You know, that's how this thing works. So, okay, targets. Well, I already gave you that. This is just a repeat of what I posted for you today. That's an ideal. Well, all these are potential targets, and they're all support levels. We're likely to get a reaction. Right now, 1792 looks really nice for a swing trade. That would be about better than a 5% drop to that one. And then just like QQQ and NQ and all that, max swing target would be down there. That's, of course, RTY for your futures trader. M2K are the mini Russell 2000 futures. Trade off those same price levels on that chart I gave you. They just use a smaller leverage factor. And there's IWM. I already gave you that one as well today. Still an untriggered trade setup. Not actionable till we break the trend line. IWM coming up on resistance. It did take out its uptrend line right here. I'm going to tighten this up and see what happens when I come into the highs here and touch those reaction highs. We're within very close proximity. What I'm looking at, the high back there in November, the all-time high, followed by these reactions. There's your downtrend line. And you've got quite a bit of resistance right here with support. It's really a resistance zone, and we're at the bottom of it right now. So just like the equity markets, quite a bit of resistance we're coming up to on the small caps, and getting close to overbought. Even you can see on this is a daily chart, and you're getting close to that overbought level. And let me say this. If this is, as I still maintain, most likely just a bear market rally, well, the one thing I always say about the RSI, in a bull market, overbought tends to become more overbought, right? Meaning go much above the 70 level and stay overbought for an extended period of time, and you get frequent overbought readings. So in a bull market, you're going to get your clock cleaned every time you try to short overbought, right? But what happens in a bull market, oversold, probably a better index to use would be the NASDAQ. Small caps are ground around. NASDAQ's got a little way to get overbought. But in a bull market, oversold is usually one and done. You get these tags, you want to buy them when you get overbought, especially with divergence. And then overbought can stay overbought. In fact, this is deceptive. I have on my QQQ daily chart, 80.37 is my definition of overbought. Not everyone else's. Any charting platform is going to give you the 70 level, but you can see there's my example, and here's why. You can see that 70, we go right through there, and it's like Monopoly. Pass go, do not collect 200, do not pass go straight to jail. You go right through the 70 level. So that's again, it's just a guide that all the charting platforms will give you, but it's not what makes QQQ oversold, at least not in a bull market. Now here's where I'm going. So in a bull market, yeah, 30 level, which is oversold. Remember, 70 is overbought, and 30 is oversold. And you get 30 levels, you want to buy them. And sometimes you can go a little bit lower, but rarely. Usually it's one and done little taps. But in a bear market, and that's what we've been in, it shows you that you start to get more frequent and deeper oversold readings. And overbought is just like you flip it around in reverse. It's usually you don't really become much more overbought. You get close to that 70 level, and it's usually very fleeting. So point being, in a bull market, you want to buy pullbacks to oversold, but you don't necessarily want to short every rally into overbought. But in a bear market, you want to short rallies into overbought, and you don't want to necessarily cover or go long at every oversold reading, because oversold is going to become more common and stay oversold for a period of time. So that's it. So there's QQQ. If we push up a little higher and hit that downtrend line target, we are going to be soon overbought, because we're at 67 and change right now on the RSI. Okay, quick update on the metals. We had those divergences yesterday, 60-minute divergent highs right here. Got to pull back. That's when I did the video last night. Came very close to the trend line, and as expected, bounced. It was a tradable bounce. Back down, and this is still good support. So you're still looking at any pullbacks to this trend line and/or that 1767-ish level, objective long entries. Even though we had the divergence there, I think we can go up and continue to diverge and work our way up that 1824 before getting a significant correction. Same thing with silver. It was definitely a tradable bounce last night from the video. That's what I did, just get in there. That's where we were right there. I think last night popped up to the first resistance level. Here I even had on well, I don't know if I showed this last night, but this is using this 10-minute chart there. You can see right there is nice nice resistance, and there's also nice support. So there it is. You had the divergent high, you had a correction, bounced up. If we have, I could see a little more pullback in silver. I could see a little more pullback in gold too, based on the divergences. But I still think whether we get a little more downside or not, I still think we can work our way up to those next targets that I gave you last night, which is in silver. I'm gonna go to a 3-month chart. All the way up there to about 2152. Well, so there's really good support. If you can get down there and buy silver at 1833, if it gets there, great. Doesn't guarantee it'll hold, but that's nice support. So it's another thrust up. Whether or not we go down before them would look like this. Grab my arrow tool, thrust up there, maybe extend these divergences out a little bit, get a bigger divergent high, and then a bigger pullback in silver. Let me just see if this trend line, how that fits right there. Yeah, there we go. There's your downtrend line too. Pop that. That should give us another spurt up there. And there's PL. PL was a trade idea. That right here coincided with T3 on the PPLT, the Platinum ETF. I only laid out the first two targets on the futures, but I had a third target right there that was hit when we hit on PPLT, which was posted at the same time right here when this one was entered. But here we are. I want to point out we're pulling back to that trend line and that former T1 level, and so that's likely contained the pullback there. And then the one I told you I wasn't so crazy about re-entering, that's palladium, but it'll probably stabilize and eventually bounce with them. The rest of the metals as well, but there it is. Palladium had that big divergent high, quick move down, little flagging type action, another thrust down, and so it is underperforming today, down another 4.43. That's the one that that I didn't grab last night, or I only grabbed silver last night, but in and out, and we'll get back in soon probably. What else? I wanted to cover natural gas. Natural gas. Okay, I showed you last night on the daily chart. Probably we're working our way down, squiggling down, and I showed you the next good support, 7409, and we may hit it, but I just covered it. I'll tell you why. 10-minute chart right here. 2-week 10-minute chart. I've got some support right here. There's a previous reaction right there, 7.544, and I also have on this active trading time frame positive divergence right there. And you got to watch this trend line. Now you can hold out. We may work down through there. We may burn through these divergences, or these divergences could just get a little larger before the next bounce. But these are those tradable rips. And natural gas. When even these little divergences, that was a 7% pop or counter trend bounce right there. So again, the risk reward, it's starting to at least before a next bounce. So you might want to, if you're going to trail it down, if you're holding out for more, just keep your stops tight. Don't give it up, because if you pop up, downtrend line will likely come in as resistance, but it's also, if it gets popped, that could lead to a little more upside there. So right now, the risk reward is not as favorable anymore. Definitely not for new shorts or for staying short. And then crude oil, same thing. This is a 10-minute chart. It's an unconfirmed divergence. That's just a term I made up. I've got a lot of terms I make up in trading, but you have a PPO. I like to see the PPO turn back up, make a bullish crossover to effectively put in a lower low because it's a momentum indicator. It's pointing down, could keep going down. However, with this kind of divergence, usually you're going to get that where you just slightly undercut that recent low, and if we recover it, this little move here back above this resistance former support will be a false breakdown, and then it'll probably send crude back up a little bit. That's just a 10-minute chart. That's just for active traders. And swing traders, 60-minute chart still looks like this. But there's also that support there. And now we've already hit it quite a bit. So look, if we break that support, that's going to be bearish. And I showed you last night the longer term chart that's still a big old bearish rising wedge, and there's additional downside, but you also have positive divergence here on the 60-minute chart. Last time we had positive divergence right here on the 60, it was good for a counter trend bounce. It was just a counter trend rally, but it was over 10, but right at about 10% right there. I'm measuring it out. So there it is. So there's a chance we could see a bounce in crude. And nothing's changed on crypto. I covered that last night. We're about where we were. I'll just hit it real quick for you if you happen to be in that Ethereum short. ETH right there, still below the primary downtrend line. This is the actual crypto right there. Downtrend line, negative divergence. And start just like the market, it's kind of holding up because the stock market's holding up. If the stock market were to go down or had gone down more by now, we would have seen this one down to here. But the market's holding up. And if the market can run and take a run at those trend lines in QQQ, we could break above this. But as of now, I'm holding on to this one. That's the futures ETH USDRR, Ethereum and US dollar. There's a little trend line that needs to get taken out right there. And if so, that'll send us down to I'm going to add one more target right now, and that's actually a target I really like right there. There's a big old gap in the futures and reaction low, and that's at 1334. And hit, that's going to be about a 20% drop in Ethereum futures. And one that I'm watching, might jump on soon here, is lumber. This is lumber continuous contract. These are in stockcharts.com. They only give you the end of day. I'll show you the updated on the 60-minute chart here in a second. But here's what I'm looking at. There's a new contract coming out for lumber. Lumber futures have been around forever. These are random length lumber futures. If you traded them, you know what they're all about. But they're coming out with a new one. They think it's just 2x4s or something like that. Smaller contract, and these are moved. These contracts are moved by rail. The new contracts will be moved by truck, so it'll be a little bit faster pricing and all that. And so there's been a lot of profit taken in this contract. They expect to see a lot of volume start going to that new one. But again, this is still around. We'll be trading, and the swings are big in this one. So here's what I wanted to point out. We now have effectively almost an equal low there, and then we have considerably higher lows on the indicators here, the RSI. The last time, let me just measure it for you, that I had on my daily chart here, positive divergence. I'm going to turn this on. It was right here back in August 2021, and lumber rallied a mere 200% from there. So and the time before that was right here, and lumber rallied a mere 292%. So you can see that there's some juice on lumber. It's like trading natural gas. 200% rally off that previous divergent low. So 100, 200, 200. I'm not calling for that again, but it's certainly possible. We're in a bull market in commodities. Make no mistake about that, despite the recent, reprieve. And like I said, that was the whole point of me being, one of the points being bullish on the market, that this was not priced into those silly, antiquated, lagged, CPI, the hot numbers that came out in June. We've seen oil continue to fall and was already falling, natural gas, everything. So, we're going to stay one step ahead of the markets. And what we're looking at here is, remember, we're in a bull market. These are higher lows and higher highs. Now, that one didn't take out the higher highs, but so far we have the higher lows. And I think a strong case can be made that commodities, a very strong case, I've made that case many times in the past year or so, that commodities have entered a new bull market and ended a multi-year bear market. about last year when COVID hit. So and as with that being said, so maybe we get down here. The next support, really good support if it gets there, is about 450. So if I don't buy lumber sooner, I'll be buying it most likely around 450, especially if these divergences are still intact down here. You know, they'll come in a little bit lower, but we could see, you know, something like this. One more thrust down. I know that's messy. Here, let me go to lumber futures LB. Here's what it looks like on a 60-minute chart. You've got positive divergences building here. You have higher highs forming on these indicators down below, and plenty of room that if we go, and here's the previous low right there, so you could have a little more downside, and you may want to start, it's up to you if you want to step in, start scaling in. And there's a nice downtrend line in which to trigger an additional buy signal or maybe an add-on. Here's some targets there, 575. I'll have to sharpen my pencil. Some of these were previous targets from my last trade on natural gas right here. Last long trade had a nice, you know, I think I pointed out at the time, positive divergence there. Breakout of you know, the downtrend line, and off that low, that was a 50% rally. So this one's like natural gas. It's a trendy little sucker. It's either going up or down. Sometimes it'll consolidate for a little while, move sideways, and then usually from those consolidation ranges, you break one or another. There's your big green breakout candle, and that was just some, you know, correction in time, i.e. consolidation followed by a breakout that stuck. And look at it. Go a little farther here, and you can see again coming up on those that previous low right there. So that's one to watch, and I think that's it. You know what I told you? Did I cover? Yes, I covered crude already. I sure did. Yep, and showed you or told you or recently mentioned, you know, that as crude continues to fall, you're going to see the coal stocks continue to fall. Those were all laid out as short trade ideas way back here when we, you know, first started, or most recently started shorting energy, XLE, crude oil, natural gas, energy companies, and so this one continues lower. A little bear flagging action there in Arch Coal right there. We had a breakdown, and still maintain 103 as my next target. HNRG, not broken the trend line yet. AMR, weak today. CIX. So really no update. Oh, this one's right on that $19 support, getting ready to crack. METC also getting ready to crack below that 1090 target. That was, well, the breakdown was there. First target hit, bounce back. 1090, and if we take that out, 965. One more, and then I'm going to end it here. I have a watch list I created a while back, and I haven't updated it, but at the time I went through the top holdings of the junk bond ETFs, JNK and what's the other one? JNK and HYG. And so I'm noticing some of those really popping today. CYH, it's at resistance. I wouldn't buy it right here. It's up to almost 20%, but big divergence, coming off a big divergent low right there. Probably more upside. And the volume patterns on this recent drop are very indicative of a selling climax. So if we can enter, break it, look, keep it simple. If it takes out today's highs of about 352, it's probably going to backfill this gap, run up to about 416, and potentially even more than that. Especially if the market holds up. You know, if the market turns around and corrects now, maybe that move happens later. Another one again I don't know if it's still one of the top holdings because I created this watch list at least 6 months ago, if not longer. But these were top holdings in the junk bond ETF. Is BHC, Bausch Health, and just coming off big divergence, and again potential selling climax. We had what was a potential selling climax there. Rallied, and you know, the rally was significant. It's not like it wasn't. You know, rallied about 41%. This time around, I think we could rally even more than that, about at least the same from where we're at now to that minimum level right there, about 703, and quite likely again, if the market can hold up for a while, maybe all the way back to 929. And then of course, let's look at the junk bond ETF. There it is right there. Just recently took out the downtrend line. appears to be flagging, and maybe like the stock market. If so, maybe it can get another thrust up to there if that breakout holds. Otherwise, the breakout fails, and this one will come back in, and then maybe a buy later. HYG is the other one. They're just different companies, and that one I have at resistance, but you could probably put the same trend line, similar comparable trend line right there. Yeah, and it is the same exact thing. There's your primary downtrend line. Potential flagging action. And then finally, I'm sorry, I'm going all over the place here. I've been trading treasury bonds lately. I'm not posting those as much anymore. I never get any responses in the trading room or on the site under the comment section when trading treasury bonds. I think most people, that just the moves are too small. I use treasury bond futures, and I say if you're going to use TLT, you need to juice it up. You can leverage up because the risk is small. But recently I just moved it a hair, but I had a resistance level target. Actually was, yeah, from way back here. I put Treasury, I mentioned that bullish engulfing candle, TYX, I'm sorry, the 30-year bond yield at long-term resistance right there, and made a case to go long, be bullish Treasury bonds. Remember, yields go down, bonds go up. TLT is the exact inverse of the TYX, which is just the yield on it. TLT is a 30-year bond. And so I wanted to mention we just hit that which was back here my initial target. I added a target right here back on July 1st because I thought we'd get a reaction there, so I got it out to you the day that was hit, and we did. We got a reaction. We shorted, or I did, covered the long, shorted the treasury bonds, and then we set up in this trend line which we've been walking up. So we had I had another short there, reversed it, covered, and went long today. I'll show you why. Because, well, we hit that level, 119.84. It was these previous reaction highs, was the initial swing target, and then pulled back, and now we hit the uptrend line and that 117 target, which was added right here on July 1st. There's the July 1st candles right there, that one. And that's support. Let me show it to you on the futures, ZB. So this is what's ZB. Again, for those of you interested, that's we had a nice divergent high recently right there, with a little buying climax, followed by a nice reversal. But this is what we hit today. We hit that 114, 179. That's really nice support. So that's where I covered in reverse. And we had to boot. See right here? That's positive divergence on the 60-minute chart. Here, let me zoom in. You can see it. So we'll probably get some more upside, and it's not too late. That was the optimal entry there at support, but you can see positive divergence on the 60 is going to carry at least up, I believe, until probably at this point. I'm going to move this line right here. That was where I had it before. I'm going to put it right here. That's 143.088. That would be a minimum bounce target with a max bounce target right now for a back test of the trend line right here. So minimum bounce target, max bounce target. And that's ZB Treasury Bond Futures, the 30-year bond, that is. Okay, not a 40-minute video, but 32 minutes. But I covered a lot of things. Detailed equity markets, natural gas, crude oil, coal stocks, junk bonds, you name it, treasury bonds, energy. So let's wrap it up here and get the video out to you guys. And if anything big happens before the close, I'll do another update. Otherwise, this will be the last one for the day. This has been Randy Finney with Right Side of the Chart. Have a great day.